Hi there, Serial Trader here. Let's take a look at the major US indices and do a little update since the last week there. And just starting off here with the price chart of the S&P 500. So we haven't actually come down to invalidate this proposition I made last week where we have the 1-2, 1-2, but it's on pretty shaky ground at this point. We're getting real deep and also very long in duration for this proposed, next degree wave 2. And we're at the point of invalidation here at 42.92, 46. So far we've gotten as low as 43, 27, 22. So even just a little emotional gap down on Monday, depending on what happens here over the weekend, that could easily invalidate this count. But I'm still very skeptical of the downside potential. Now, just a little update. I'm still long futures, have not been stopped out yet. And that hedge I put on, I've just simply adjusted it now to this coming Friday. So I added a week of time onto it, and that's that 4,300, 4,280 vertical put spread there on the SPX options. So as far as that goes, nothing has really changed other than we've come down a little further, but not to the point of invalidation of this proposed count. But let's say we do come down here and break that level. So what does that mean? Well, that's a difficult question here. So if I just remove everything, and let's just pretend that this is about to just take a huge dump, we would have to be thinking that this is maybe a 1-2 down. Okay, let's just expand on this a bit. So 1-2, obviously we'll be heading down in that larger 3, and don't worry about the position here, these are just placeholder labels. So we got the 1-2. Then we would have to go once again another 1-2, and let's drop that degree down 1. And then since we came up here and did an overlapping move, we can't go 1, 2, 3, 4, 5 or whatever. So we would have to go another 1, 2. Let me just get these down, drop that degree as well. So we would have to be under the idea here. We've got a 1-2, 1-2, 1-2, and we're about to head down in a wave 3 of 3 degrees down. So that would suggest an extremely nasty and aggressive move down here in short order. And let me just try and haphazardly put a little order into this. And again, don't worry about where these are or their levels. These are just little placeholders. So I guess that's possible. I mean, depending on how you think things are going to go in Europe with Ukraine and whether you think the market's actually going to crash on that news, or given the fact that we've already been building ourselves up for it, even if it does happen, do we actually rally on it? Or maybe it doesn't happen at all, and it's all just propaganda back and forth, and we rally on that. So there's a lot that can happen here. But to be bearish here, basically, from a wave count perspective, you pretty much have to be embracing, I would suggest, that we're in some very strong wave 3 of 3 of 3 of 3 of 3 of 3 decline, at least 3 degrees of wave 3 to the downside, basically imminent here right away. Now that is certainly possible. I'm still very skeptical of it. But that's how I would view it here on the S&P, just looking at the S&P. But I do want to go with the Dow and give you an alternative proposition here. So both the S&P and the Nasdaq, they're pretty messy. I'm not happy with any wave count I can come up with on them, whether it be a bullish or bearish wave count. They all have their, things you can point out that aren't perfect or desirable about them, and that's kind of a low confidence environment in that regard. But then I want to look at the Dow here once again. I've re-looked at this and maybe come to a different conclusion, just specific to the Dow. And I'll also point out sometimes there's one indice that's very clear, and that's the one to go with, and the other two will just be carried along for the ride, and later on you'll have to just force a wave count on them that fits the one that actually made sense, if that makes any sense. So right now, to me, the clearest and easiest thing here is the Dow, so let's just look at it. So I have proposed the possibility that we do have a 1, 2, 3, 4, 5 wave move up for an initial wave 1 here of that larger wave 5 on the Dow Jones Industrial Average, and we're doing a ABC down for potential wave 2. And let's just dissect this. Let's kind of build the support for this interpretation. So I can definitely go in here and get a 5-wave move up on a lower time frame. It's not beautiful, but you can certainly do it. And then what would you have to do with that? Well, okay, now we start dissecting. So, okay, the wave 2 should be a relatively deep retracement. We know that the 618 retracement, the 61.8% retracement is the, quote unquote most common wave 2 retracement. So we got just about down to that 61.8% retrace and then had a impulsive move off of there. So that looks reasonable for a wave 3. It was certainly longer than wave 1, and it was certainly the strongest move up in this proposed impulsive sequence. Okay, so what did we retrace of wave 3? Well, we know that wave 4 typically retraces between a 38.2%, hang on there, between a 38.2% and a 50% retracement. Those are the most common wave 4 objectives. So we didn't quite come down to the 50% retracement on what I would call a proposed A wave of the triangle down. But the way it works with the triangle, as long as the triangle doesn't end overlapping wave 1, that's considered valid. So as long as wave E of the wave 4 triangle doesn't overlap with that wave 1 high, you can consider it a non-overlapping wave 4, and then the next move up, a wave 5 to complete an impulse wave. So if we actually do a 38.2% retracement and we suggest that wave 4 ended right here, wave E of 4 ended right here, therefore the termination point of the actual triangle is here, then wave 4 essentially retraced about a 38.2% retracement. So we have some, rules and guidelines starting to line up here as far as labeling this an impulse wave. And then, of course, we get another move up to a new high, and that gave way to a strong correction. So I can certainly support a strong case for this being a non-overlapping 5-wave move up for an initial wave 1 up. And now the subsequent decline we've had looks so far like an A, B, and probably C wave, maybe a little bit more to go on the C wave. But nonetheless, a 3-wave decline after a 5-wave move up. I can't really make this case on the other two indices, but I can make this case on the Dow. So I think that deserves some attention. Now, what did we do here? So I've done some AC relationships to look for. So there's the 618, 786, and 1. Those are the common ones. So right now we're hovering around the 618 relationship between C and A of the proposed 2. 786 is a little lower here, and then the 1 is pretty deep, but still technically valid as long as we don't take out that prior low from January 24th on the Dow. And also, what did we do for an overall retracement of the initial impulse up? Let me just, I think it's fairly deep already, so we'll put up the 618. Okay, so we're sitting just below or around the 618. And then, of course, we have the 786 down here as well, should it materialize. So I think that's some interesting stuff to ponder. And this, even within the wave C, we can go a 1, 2, probably a 3, 4, maybe 5's almost done. Maybe a little bit more downside, early Monday, and then look for a reversal. So that's the way I'm thinking about this. It's not a super high confidence environment. This could certainly continue going down and break the January 24th lows on all the indices. I'm not discounting that possibility, but I have a lot of trouble embracing it as far as the price action goes. And what if we throw up a parallel trend channel? I suppose we do it like that. Yeah, so I mean, there's not a really good take on this. If I was looking just at the Dow, I'd be pretty confident that we're going to resolve to the upside, but when I have the other two indices to look at and they're messier, I can't make as strong of a case, obviously. So therefore, still long and still hedged, and hopefully next week we actually get a resolution, at least a big reversal up or a continuation down, at least something, because for now we're still, by all measurements, stuck in a range that we've been in, well, since the range between January 24th and February 9th, it's now February 18th. We're still in that range, somewhere in the middle or lower middle area of it. That's all we got. Okay, I think that's what I wanted to go through on the Dow. Just to point out the potential, valid technical potential there for making a bullish case. S&P, yeah, we discussed how we, you know, might be in the super bear scenario, although I'm highly skeptical of that. And I'll go over some other reasons why too, once we head over to the Thinkorswim charts here. Okay, so anything remarkable with the candlesticks? I'm trying to spend too much time here. No, not really. No candlestick reversals or anything. Not quite oversold on the daily oscillator, but approaching that area. Weekly on SPX. Nothing overly remarkable. We are actually closed below the 50-week simple moving average, so that's a little of a technical sign of weakness, I suppose. Although we have still not broken that low we've made all those weeks ago. Okay. Let's go over the Dow Jones Industrial Average. Anything remarkable there from this view? Not really. Approaching the oversold condition on the oscillator. Not quite there yet. Weekly, we're below the 50-week simple moving average on the Dow as well. Okay. Now if we go over the Nasdaq Composite, same idea. Still holding, you know, the key levels, but definitely need a reversal here soon. And weekly, it's pretty similar looking here. Yeah. Still below the 50-week simple moving average. Okay. Not going to spend too much time on that. Anything interesting on the Nasdaq 100? No, not really. Nothing worth mentioning. Just any different from the composite. Okay. Now, one thing I do want to look at here is the Volatility Index, so the VIX. So we're pretty low here on the VIX, considering, like, here's the thing. If we're about to go into a wave 3 of 3 of 3 decline, which is extremely bearish, and it should be very powerful, fast-moving, severe, and the VIX is way below where we have been recently, I just have trouble believing that. Now, obviously, the VIX could have a huge gap up and change our mind, but right now, I'm seeing lower highs on the VIX, so that has me leaning towards still a more bullish resolution. And I'll also point out something on the VIX VVIX tool. And okay, here's what I want to point out. So we actually do have a divergence here. So here we have a lower high on VVIX despite a lower low from the same reference point on SPX. And we also have a lower high on VIX, again, despite a lower low on SPX. So that is a bullish divergence between VVIX, VIX, and SPX. Typically, if SPX is making a lower low relative to a reference point, VIX and VVIX would be making a higher high. Instead, they're making lower highs. So that has me also leaning into the more, you know, larger potential for a bullish resolution here. Of course, very much unconfirmed. That's just kind of the initial ingredients of a buy signal. We would have to get, we'd have to get back below the red moving average here on VVIX, and we'd have to get back above the blue moving average here on SPX, which is a moving target, but currently that's 44.16 on SPX, and we're at 43.48. So, initial early signs with this divergence makes me, you know, a little bit more hesitant to embrace the wave 3 of 3 of 3 down. Certainly prepared to be shocked, but currently not really leaning into that too hard myself. All right, well, that's probably all I need to go through. So yeah, just bottom line, I guess the message of this video, highly uncertain looking, can't get a very good read on the SPX or the Nasdaq indices, but looking at the Dow Jones Industrial Average, I think there's significant cause for hope that we get a bullish resolution yet and hold these January 24th lows. But we shall see this coming week. Lots of stuff happening in the world. So we're just gonna have to wait. The market has to reveal itself. Eventually, it will be clear what's going on, but we're just not there yet. All right, Serial Trader signing off.